Morning, everyone. Today is Thursday, the 16th of May. It's the day post CPI release. Um, for this morning, I don't really want to be taking a look at many things. I think we're just going to be doing a review on the XY, and then I'll share my thoughts on what to expect for today. More so towards New York Open, I think we'll look for some sort of setup based off of what I discussed this morning. And yeah, so for the week so far, we've seen quite a bit of bearish price action. If you guys remember the previous videos that I uploaded for you guys, at the beginning of the week, we were kind of expecting price to be supported over here, and we switched biases midweek from bullish to bearish due to the higher time frames and what we saw in the higher time frames. So on Tuesday, I think it was, yeah, on Tuesday, we reacted off of this new day opening gap as suspected. It's been a hefty week with all the news drivers that came out. So I mean, for those who traded, props to them. I don't trade it myself, but it's been a decent week for volume, I would say. We reacted off of the new day opening gap. Initially, I thought this would support price, and I thought we would see us trading higher, maybe taking out our external range buy side liquidity. But sort of midweek through, as I was looking at the higher time frames, I kind of switched biases because it made a lot more sense for us to come down. So we have that reaction on Tuesday, and this kind of confirmed for me that we'd be going down further on in the week. A couple of targets that I had in mind was this low, even though I didn't discuss them, was this low in here, which is inside of the buy side imbalance, sell side inefficiency over here. That would be your first target, and then second target would be the external range liquidity over here. So far, we've been on track. I mean, we've violated one of our targets. My thoughts as of right now, we've been seeing quite a few of our bullish period rays flip and repulp price. So instead of them being bullish period rays, for instance, like the fair value gap in here, if I can mark this out for you guys, instead of them being bullish period rays, they're flipping and they are supporting or influencing bearish price, right? Or creating bearish reactions. So we've been trading down for most of the week. My thoughts as of right now is we are inside this buy side imbalance over here, and we've already taken out one of our targets. So for the week so far, that would be enough for me. I'd be content with sitting out for the rest of the week, not really looking for anything, but I still have my thoughts. So we've cleared one target in here. Let's get to the point. We've cleared one target in here. Can mark that out. And we've swept that low. Now, the idea of clearing liquidity or sweeping one of our targets is that once it does happen, a retracement of some sort would be due. So I'm paying attention to this low. Usually price will return to these areas where it sweeps. So we have our daily rejection block in here. I'm not going to get into the theory. Imagine it as a order block. We've got our daily rejection block in here, which we traded into this morning. We've got this new day opening gap in here, which I'm not really marking out, but I'd like you to be cognizant of it. It is there. It is real. And then we've got our external range sell side liquidity. My thoughts as of right now is that we are too close to this external range sell side liquidity to not take it out. But what they can do here is we could flip the buy side imbalance, sell side inefficiency, which would otherwise support price and give us a bullish reaction. We could flip this and trade back up into the mean threshold of that. So the 50% of these two levels. If you take a fib and you mark out the fair value gap, the 50% of that level, as you draw it out, is a common reaction point for price. For your own studies, you can go into price and check the mean threshold of most of your fair value gaps and notice how price behaves around it. Study the behavior of price around those points. Right. So for this morning, what I'd be expecting for DXY is to form some sort of swing low. I mean, I don't really want to do any lower time framework, but we've kind of got that forming already. As this 4-hour candle closes, I'll be a little bit more confident. I think that for today, and depending on the volume that we receive, we do have a impact news event today. If you can load Thursday, 2:30 p.m. South African Standard Time. We have unemployment claims. So depending on whether they want to run it up today, between today and tomorrow, I think we'll see the 50% of this level reached. We've got lower time frame period raise in that area as well. It is relative to our range that we are in currently, which is from this high to this low. It is in the lower portion, so it's not in premium or anything, but it doesn't need to be in premium. We've already seen the bulk of this week's orders take place in premium. What I like to pay attention to is I like to pay attention to the stop hunts that we form within the week, where they take place. For instance, this 4-hour one, as we trade into that new day opening gap, took place in the upper portion of our range, right? Price does not have and will not, if the move is valid, it does not have any reason to and will not trade back to these areas unless it's completed its objective. Now we've taken out one of our objectives, but I think that ultimately we'll be heading for our external range over here, right? So that's what I'm expecting for this morning. I'm not going to be giving you guys any sort of GU, any sort of NASDAQ or lots right now as of now, but carry this idea over into the actual market that you trade. Understand the nature of the two relationships. So if DXY is supposed to be bullish, the foreign market which you trade, which trades against DXY, will be bearish. So if you trade GU and DXY is supposed to be bullish, GU will be bearish. If you trade NASDAQ and DXY is supposed to be bullish, NASDAQ will be bearish. Or let me not say bearish, but the higher probability trade setups that you'll find on NASDAQ will be bearish, because sometimes they can kind of do their own thing. But yeah, I hope this video was insightful for you guys. Please apply proper risk management today. We do have one high impact economic news driver coming out. If there's any questions, please wherever you receive this video, be it on YouTube, be it on in any of my Telegram channels, feel free to leave questions down below.